Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, checking back in on oil, starting with the hourly time frame. And there was a potential pattern we were watching as we traded over the weekend and over the holiday, and it was a potential bearish reversal head and shoulders pattern. And we didn't end up getting, that's a weird right shoulder. We didn't get up getting that bear break. It was the neckline of support that you watch on a bearish reversal head and shoulders pattern. And 52.06 was the consolidation low back here. So that was our support line. And we bounced off of 52.10, never breaking that level. And then the bulls showed up with a nice push to the upside. So that's a very key support going forward, 52.06. If we break that level, there's not a ton of support down here because you can see the bulls made a big strong move to the upside over a few hours, and we didn't build much support on the way up. So 52.06, bulls really want to hold that level. And in terms of resistance, we can see the bulls made a nice move. I've got a little uptrend line to watch on this hourly now. Let's get rid of that bad head and shoulders. So we've got that uptrend support line to be watching on the hourly, and the bulls need to break resistance, $53, and then we're looking up at 53.49 and 53.47. So we have a little bit of a double top at this level by 2 cents. Very clearly, the bulls are going to have to break that level to continue forward from here. And we're going to be watching that into tomorrow. The bulls really want to see a green day and maintain this higher low pattern and head back towards that resistance, because where we currently stand on the daily time frame, it is still lower highs, where we have our high on the climax from a couple weeks ago, a lower high at 54.29, a lower high at 53.47. Now we have our higher low, and now the bulls need a higher high. Otherwise, we're just continuing to form lower highs and lower lows, but we have this higher low to work with now off of that 52.06 support, and we need follow-through and a break of 53.47 for the bulls to restore a lot of confidence back in the overall uptrend. Now we're starting off the weekly time frame here on oil. Big lower wick showing bulls buying the dip last week, and not much going on so far to start this week. Not much trading has occurred. And checking in on USO, we have a clear resistance to be watching, and I'm looking at the high of last week, 1163, and we failed that level by 1 penny with the gap up open and then the close down near the low of the day. So 1163 is a very key resistance the USO bulls need to break. You can see they bought the dip the past 2 weeks with those nice lower wicks, but we need to see a higher high and a break of 1163 for the bulls to show their short-term control. So to break it all down in easy terms, key support on oil, I am looking at 52.21 and 52.06. Key resistance, 53 and 53.49. I appreciate you watching. We'll check back in tomorrow and see if the bulls can maintain this higher low pattern. Have a great night.